Unconventional central bank policies have made it harder to use fundamental analysis to forecast gold prices. Can the same be said for technical analysis? Do traditional technical tools still work for gold under current conditions? We've got technical gold analyst Gary Wagner joining us now from Hawaii. Gary, thanks for being back on with us.
My pleasure as always.
So Gary, do you think traditional technical analysis tools are becoming less and less effective in determining gold's next move? What's your take on the matter?
Well, there's no doubt we have seen a lot of factors come into the market that originally wouldn't be interpreted or extrapolated in the same way that we are now. And so the one thing about technical analysis is we're looking at the same fundamental data, except that we're converting it into mathematical terms. And once it's in a mathematical term, we have an empirical way to analyze the data. So I think if anything, a technical analyst right now get a little bit of clarity where just fundamental analysis will tend to cloud the scenario sometimes.
All right, well, let's take a look at gold right now. The metal gaining momentum as we kick off the week. So the question is, has gold found its floor?
I absolutely think it has. You know, at the beginning of this year, the end of last year, when we came down and touched those levels at around 1040, 1045, those turned out to be the bottom. And I think that that will be the bottom in terms of gold pricing.
Well, I want to share a chart that you sent to me, Gary, which shows some key levels for gold. What are you eyeing right now?
Well, if you look at that chart, there's really three things that we want to focus in on. There's a red line on the bottom, and that represents support. Major support is at about 1200. We have minor support at about 1222. The green line on the top represents resistance, which we're holding right now between 1292 and 1300. And then most interesting is the fact that we have had a series of lower highs and higher lows, which is where you get that pennant formation, or what I tend to call a compression triangle. And so what you do with the compression triangle is look for it to reach the apex of the triangle, and you should get a release of energy, a strong break. In this case, we were looking for a break to the upside, because typically on a compression triangle, you will return to the prevalent trend.
Well, it's really interesting because we're seeing different forecasts coming out of research firms. New York-based CPM Group calling for gold to drop 7% to 1130 in the second and third quarter, while Metals Focus called for gold to rally to 1350. And these are, this is just one example. So why do you think we're seeing such mixed calls on gold here?
Well, the Fed has been a difficult read, and the fact that we had such dovish statements come out of the Fed when the U.S. economy is basically solvent. It is growing. It's just growing at a much slower pace than many had hoped or anticipated. I think that we're simply seeing equal data facts being read in different ways.
All right, good thoughts, Gary. Thank you so much for joining us today.
My pleasure, and I want to wish all of our viewers prosperous investing this week.
Thanks, Gary, and thank you for watching. We'll see you tomorrow.